I think that there's a bit of a risk-off reason for owning Bitcoin emanating from the emerging markets. We've seen in Argentina with the new administration there. I think the currency, I mean, they made official what the black market already knew, that the currency was worth half of what it was reportedly worth. So I think we're getting those warning signals. I also think, yesterday we got the Swiss bank cutting rates, which was a big surprise. The UK turning a little more dovish. The Fed now a little more dovish. Why? What are they seeing out there? And so many people think of Bitcoin as a risk-on asset, and it certainly has traded like that over time. But we have been looking at it as both risk on and risk off. And I can tell you when we first learned that in 2015, when we took our first position in Bitcoin via GBTC, Bitcoin was about $250. And many people were making fun of us at the time, thinking, oh, they're new. We had just started our funds in October of 14. Oh, they're new. They're just trying to gain attention. This is a marketing gimmick. And so we were really on the spot. First of all, we had done a lot of research. We didn't think, we thought there was real investment merit, but we were watching like a hawk its moves. And back then, Greece was threatening to leave the European Union. And every time there was a flare up, and a fear of another European sovereign debt crisis, Bitcoin inched up. And so we've been looking at it as both a risk on and a risk off asset for quite some time. And the regional bank crisis last year kind of confirmed that point of view, that here Bitcoin more than doubled as regional banks were imploding.
Around the globe, we're witnessing the significant decline of multiple currencies, a topic that's not getting enough attention. While currency devaluation is also occurring in Western countries, it's happening at a slower pace, typically around 10 to 15%, making the effects less noticeable during times of financial uncertainty. Bitcoin has emerged as an alternative risk-off asset and a hedge against potential currency collapses. Cathie Wood recently provided an update on Bitcoin, focusing on the substantial impact of Bitcoin ETFs. She highlighted that this is just the beginning for Bitcoin and the broader digital asset class, pointing to increasing interest from institutional and sophisticated investors. Stay tuned to the end of the video where Cathie shares her insights on the Bitcoin halving and why she believes it could drive Bitcoin's price to $1.5 million per coin.
Ever feel like you're wasting your money on things that don't really matter? Stop. You don't have time. Don't miss out on this 2025 bull run. Educate yourself now. Don't spend $12.50 on junk. Educate yourself on how to be successful in crypto using our crypto cheat guide. Unlock the secrets of crypto and make smarter investments today. Visit the website now on the link in the description for your exclusive copy. Start your journey to crypto success today.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
I think by all accounts is going very well in the aggregate. We're thrilled with our positioning and actually somewhat humbled, I must say. So I think we're number 3 if you take out Grayscale. So very happy with that. Very happy with the reception. And I think the interesting thing that happened when you have 11 ETFs approved at the same time, that's never happened before. The amount of energy and research communication that has gone out around this spot Bitcoin ETF opportunity, has been unmatched. And I think it's done a great service for Bitcoin and digital assets generally, because this is just the beginning of a completely new asset class. I think there's been a lot of communication about what Bitcoin actually is in this new asset class, leading the charge. I know that our research team, I know Yassine is there with you, has done an amazing job, not only in the last 6 months or year, but we've had research extending back to 2014. And our first white paper in 2015 when we took our first exposure. And so we've been singing the praises of Bitcoin for a long time as a new asset class. So that's a start. But I do think there are some macro factors. I know Mike mentioned this earlier. We're very focused on what's going on in the emerging markets right now. I think with time, many more people will understand that the Fed, with a 24-fold increase in interest rates over little more than a year's time, has absolutely shocked the financial system around the world. Now, many people are looking at very short-term lagging economic indicators here in the United States, primarily because the Fed is doing that. But if you look at other signals out there, there are signals that not all is well in the world. I know Mike mentioned the Naira, the Nigerian Naira, which has devalued by 2/3 since last June. Now, Nigeria is one of the wealthiest countries, oil rich in Africa. And with a new administration that's become very business friendly, I think they thought they could let the currency float, and they found out, that it has been very painful from a purchasing power point of view and from a wealth point of view. We've seen the same in Egypt. That the Egyptian devaluation was 40% at the beginning of March. I think many people were very surprised to see us buying when Coinbase got the Wells notice and the stock price went down 20 or 30%. And then again, when the SEC sued them. Coinbase is the most regulatory compliant exchange in the world. Some of its competitors have gone out of business, FTX, of course, being an important one. Binance has had its share of issues as well, CZ having to step aside and the fines and so forth. And Coinbase is now going international, very importantly. And I think as the trusted company that it is here in the United States, I think it will catch hold in the rest of the world. We're seeing it with an offshore derivatives exchange, which is taken off and is doing, I think, a lot better than a lot of other people expected. And then we've got Base. They've got an underlying protocol which is generating organic demand with millions and millions of people already on it. Compared to, and it doesn't have its own token like FTT or BNB. It's truly organic demand. So I think it's got a lot going for it. And again, it's a great way to capitalize on a new asset class that is going to create a new class of asset managers. We're all going to become power users as we participate in this ecosystem. We're not going to be, as much we call ourselves an active manager, but as you say, we, buy and hold a stock if we really like it. We'll get to do a lot more in this ecosystem as an asset manager. So that's pretty exciting. For the first time, the supply growth of Bitcoin, as it drops from 1.9% per year to roughly 0.9% per year come April, it's hitting an important milestone. The supply of gold has been growing very long term, on average 1%. So now, it's just marginally, but it is below the supply growth of gold. So we're trying to use that to help people understand a lot of the reason that gold became such a successful asset class is because the supply growth was fairly controlled, especially relative to money growth out there in various regimes, including our own. And so I think I don't see any reason why the halving won't cause the same dynamic that it has in the previous cycles, especially as we're going out there with that message. It doesn't happen right away, April and boom, and it usually doesn't happen that way. So maybe they'll develop some impatience, but we think that it emphasizes one of the core features of Bitcoin, and the reason it is a risk-off asset as well as a risk-on asset.
In Cathie Wood's recent update on Bitcoin's future, she notably highlighted the launch of the ARK Bitcoin ETF and its positive reception. During her discussion, Cathie addressed the current financial landscape, including the Federal Reserve's dovish stance and Bitcoin's evolving role as both a risk-on and risk-off asset. She provided valuable insights on Coinbase, the upcoming halving event, and the potential impact of monetary shocks on economic growth, emphasizing Bitcoin's volatility as a defining characteristic of this emerging asset class. However, the standout revelation was Bitcoin's role as a hedge against currency devaluation and uncertain economic climates. This highlights the growing importance of Bitcoin as a potential safeguard amid global financial uncertainties, a perspective that many are beginning to recognize. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.